All right, let's see if we got this up and running in the Moxie room. Let's see, it doesn't quite look like that. So let's get one more try on that. All right, just give me 2 seconds here. We'll get everything up and running. All right, let's see if that works this time. Looks like it's much better. So let's throw this on. Hello, everybody. Hope you guys are doing well out there. Yep, thanks, Mirza. And yep, so if anybody is new to me, you can come check me out at profitpilot.com and see about, I do video newsletters twice a week over there. And then you guys can check out the services and trading rooms and anything else that I offer over there. All right, so let's kind of dive into it. We know that the market has basically been pretty quiet yesterday, and then starting today, we have Jerome Powell speaking at 10:30 Pacific time, which is my time. So 12:30 Central, I believe that's the time. Could probably catch it on YouTube, maybe any other outlets like that. I have a feeling it's going to move the market. He's going to be probably trying to jawbone the market into going down again because he's trying to talk about inflation and still being hawkish and stuff like that. So we'll have to see. It is also just a busy week as far as news and events coming out as far as economic data. We had some today, I think, jolts and some other stuff. And the market moved a little bit in the overnight, but otherwise you can see right here the market's just sideways, kind of waiting for, I think, Jerome Powell. Now we'll have to see if that is actually what triggers it, and we'll go from there. What you can also see, and we'll get into some other indicators that I'm looking at, and then Sus, I see your question about UNG, so we'll definitely get into that. And then any of you out there in the Twitter or Facebook or YouTube space, feel free to drop in a question, and I'll get to it. All right, so if you guys can probably see that we do have a Moxie price trigger to the downside, so it's a red one. And this is something that I have been looking for and waiting for leading up to basically this week, because last week, going into the Thanksgiving shortened holiday week, the up move here was basically a short squeeze. Now, this is something I have been talking about for a while because you could see that the Moxie indicator on the 15-minute time frame was not very strong. And what that means is that the two indicators were spread from each other. You can see how there's a big gap between the two indicators. And that indicates that this up move wasn't very strong. It meant that the indicators did not agree with each other. So yes, it moved up, but not very strong. I view this as pretty much just a short squeeze. I do not view it as new buying coming in, people saying, oh yes, I actually want to buy and hold from right here because I think this is a good spot to get long. It was short-term traders and also shorts having to exit their shorts, which creates buying, which I think is an artificial buying in this sense. And I was pretty much proven, or that was verified. I was talking about it to the Moxie subscribers last week about that, and said, watch for price to collapse, because once the shorts are done, there's nobody else to actually left to buy. It's just the shorts exiting. And I think I was pretty much proven correct right there, because price came right back to where it was going into the holiday season, so holiday week. So I think that looks pretty good. You could also see as price was trying to go up, the Moxie indicator kept going down, and we know we're right at this trend line. We're also right at the daily 200. We're just very extended on a lot of different situations. Now, what's left to know is what will Jerome Powell's speech do today? If it does move it to the upside, I don't know how much I'm going to trust it. Yes, we could be saying that there could be some support here at the daily 21, but everything else I see with the VIX and the UVXY so low, it just seems like I don't know how much lower it can go without at least kind of refreshing. And we are at an area where price is running into resistance. Also, if we look at the higher time frame right here on, say, the monthly, we are kind of at another decision point. So based on my studying, going all the way back to the 60s and 70s and anywhere else in between, basically, as long as price stays underneath the monthly 10, we're in a downtrend. Now, the difference is if price can get up over the monthly 10 and then stay over the monthly 10 and start to follow it there. So that's also different than just poking up over the monthly 10 and then going back down. You can definitely have candle wicks above the monthly 10, but as long as the body of the candle and price generally stays below, other than like just a jump up, but it generally stays below the monthly 10, then we should be looking lower. 2000, 2008, all confirmed that kind of stuff. I know that the Dow is above and all that kind of stuff, but I've really just been studying the SPY. If you go back and look at that, we're right there. So, as it stands right now, it looks like the monthly 10 is going to be resistance. Is that going to change? I mean, we're at the last day of basically the last day of the month here, and so we're, November sure looks like it's going to be sticking underneath the monthly 10. So what is December going to do? Are we going to have December poke up and then close below? Or are we going to have December poke up and stay above, and then that maybe indicates more upside? So it is a very slow time frame to look at, the monthly time frame. So I would be looking at that and just being aware of that situation. Yeah, Jay, lots of stocks are still way overextended. Where's that retracement? That's exactly what I'm looking at. You and I are in the same boat as far as that goes. So let me then pull up, the SPY bounce off the hourly 200. Anders, you mean like a rejection? I think that's more what I'm looking at is rejection. So here you can see basically, call that the 200. That was definitely the 200, and we're pretty much right there again. So I look at that and I say, yes, the 200 should be resistance. And oftentimes in my book and the Moxie group, we've gone deep dive back into the 60s and looked at all of those bear markets on the daily time frame, and almost all of them at some point go back to their daily 50s, and that's where we have to determine if the daily 50 is going to be support or not. You can see the last two times the 50 has not been support. So in my book, I think we need to test the 50 and see how that works. Now, of course, I don't think it's going to necessarily be a straight line to the 50. Maybe it's a down, up, down situation, but we're going to have to take this kind of one piece at a time. Now, let's go look at UNG real quick, and then I'll come back and look around at some of the other, economic indicators that I'm looking at. Sus, it sounds like you took a short on UNG after we took a long. That's great. So we took a long basically in this area, and it went exactly to my target of about the third ATR on the daily chart. What that equaled was, 46 to 48% on Boyle, which was really great. And at that point, I said, hey, yes, it is likely to pull back, but I only want to be trading it one direction. But there was opportunity to the downside if you wanted to. I know J-Law, you guys were talking about, Sus, you guys were talking about it. So yes, we got out right there. And if you really wanted to, you could short it. Now, I had some questions yesterday and the day before about, hey, is this a buy? And I said no. The question was because price was sitting right here on the hourly 50, and yes, the Moxie indicator was above zero, and we had price at the daily 50 and call it the daily 21. So the question was, is this a buy? Because you could see that price went up right there on the 15-minute time frame. And so I asked the question, well, what does the 15-minute time frame look like? The 15-minute time frame had price moving up into a downtrending moving average. You don't want to trade the X. Those are conflicting directions. Price going up against a downtrending moving average is not ideal. You don't want to do that. Also, where was the Moxie indicator on the 15-minute time frame? Below zero. So I could definitely say this was not a long. I couldn't necessarily say it was short, but it was definitely not a long. As it turns out, it was still a short. Great. So it continued to work that direction. But it was don't go long. And, when I can definitely say one thing or the other, then you kind of go with that direction. So that was not a long. And you can see today, price continued to move down. Now, Sus, your question was, is this buyable? Because we have right here a potential trampoline move. So, Sus, I'll bring you back to the same question I was asking J-Law and some of the other guys the other day. Here, tell me, is this a buy on the 15-minute time frame? And you can answer, but basically your answer should be no, because I don't see anything that says buy. There's nothing here on the 15-minute time frame that says I'm in an uptrend, I found support, I want to go higher. There is zero things that says this thing's ready to go. It could go higher, but it's not confirmed yet. It could go lower. It could also chop for a while. So all we're seeing is that there's a potential trampoline move here setting up on the hourly chart, but there's no trigger. So no trigger, no trade. So, you know, we're watching this because I do think that UNG is going to be bullish eventually. And so, yes, I do want to be looking for a long, but zero indication or confirmation on the 15-minute time frame of that. And sus, and JLaw, I know you guys follow the Moxie rules pretty well. So, we just got to keep waiting. We just got to keep waiting until we see a little bit more shaping up on that UNG. Let's see, when to close a short. You know what do they say? Pigs make money and hogs get slaughtered, something like that. So if you made money on the short side, you know, anywhere in that box, I'd say that's a pretty good trade, especially since cold or boil are leverage ETFs and they move pretty well. You are probably getting into an area where it could be a little bit risky to continue holding short. But on the other side of it, I don't see anything that actually says you need to get out yet. Yes, it is kind of at the third ATR. It is a little bit stretched, but I don't see anything that says buy, which means I don't see anything that says exit your short. So if you want to keep pressing it, you can. You know, you've had a pretty good move. I am looking for a buy zone, but it's not quite there yet. And if we do look, let's kind of look back at the history. So if we come over here, and I wanted January was another good time. So you can see here, you know, how far down did it go? You know, on the drop, it went outside of the third ATR. Here on this drop, it went outside of the third ATR and then even more. So you can see that these pullbacks are fairly significant. The other thing is, as kind of a signal that you definitely need to be out of your short and maybe consider long, is kind of a reversal and a reversal. So if you really want to play it to the end, you could hang on to UNG until it reverses, and then that'll be your signal to get out. And so far, it has not reversed. I mean, this thing's still going down. So yeah, if you really want to play it to the bitter end, that would be basically what I see. All right, so let's see. Let me show you a couple other things real quick. My computer is being very slow for some reason. What I wanted to show you guys was TLT and the dollar. Wow, my computer is super slow right now. Let's try something else. Okay, so anyway, what I want to be looking at there we go, is with TLT. TLT is going to basically go with the market. And what I've been noticing is that, yes, TLT has had a nice move. And for anybody else watching, notice you have price below the 50, the Moxie indicator above 0 from a double bottom. That is what started this move, was the trampoline move and a elf shoe double bottom on the daily chart. So definitely some Moxie signals in through there. Now the fact that this is so high up, you know, third ATR, big gap, we're starting to see a little bit of a double top here despite price going higher. I am seeing that energy and momentum is starting to wear out on TLT. So I do see TLT starting to move down. I'm saying that TLT should at least head back down to the daily 21, daily 50 area. It could go further. If it goes further, I would be looking for the hourly 200. If that moves down, then that should mean the market also wants to move down. And we can see that starting to happen here because price is underneath the 15-minute 50, and we've been seeing a negative divergence build on the 15-minute time frame. So that looks like it wants to go down. And then if we look at the UUP, which is the dollar looks pretty oversold. And so it also looks to me like it wants to at least get a bit of a bounce to the upside. I'm not saying anything wild or ridiculous or start a new trend. I can't see that far ahead, but I do think that we're going to get a little bit of a bounce or a drift upward, which I think is going to put downward pressure on the market. So all these kind of bigger macro things are starting to align for what I would imagine is going to be a down move in the market. So you can see here, double bottom, see that double bottom, positive divergence, the Moxie price trigger is firing. And you can see that even here on the 15, we do have divergence. We also have the Moxie price trigger looking nice and tight compared to back here where it was pretty loose, wide. And remember, when the two Moxie indicators are spread from each other, they're not very strong. So we're seeing that the Moxie indicators on the 15-minute time frame are fairly tight together, so there could be a decent move here. And we just had a trampoline move on the 15-minute time frame. And remember, a trampoline move is when price is below the 50, but the Moxie indicator is above 0. It's basically a buy the dip situation. You know, if the Moxie indicator is above 0, it's trying to tell you like, hey, energy and momentum is positive. You should be above the 50. So when you dip below the 50, it's like trying to put a beach ball underwater. Moxie's trying to tell you, hey, energy momentum's positive. What the heck are you doing below the 50? And it should pop back up. That's why I call them kind of trampoline moves. So I'm looking at those things, and then let me just show you one more thing. The UVXY, and then Venus, I'll get to you, and Anders that too. The other thing is the UVXY is pretty much at an area where it looks like it wants to, just an inflection point. I mean, it is really pretty stretched to the downside, kind of like this, like this. We're seeing a double bottom on the stochastic, whereas before we were kind of seeing the same thing. So the stochastic is just pegged at the bottom, despite price going lower. And I'm starting to see a lot of positive divergence on the hourly Moxie indicator. And we could also be doing a trampoline move here on the 15-minute time frame. So if you guys need to see another example of a trampoline move, here you are on the UVXY 15-minute, also UUP 15-minute. So it seems to me that if we're going to get a move in the UVXY, the first move is probably going to be something up here around the daily 21. It's very similar to what it did before. So that's why I'm looking at these things, and they just look like they're kind of lining up for just a move, like a 1 or 2 day big move, something to that extent. So just seeing a lot of things lining up for that. All right, so let's see. Venus, if we're looking at BBBY, seems very oversold. Yes, but you know what? Things can continue to stay oversold. So Venus, I would caution you about trying to bottom fish, is what they call it. This thing has been in a downtrend for a very long time. Tell me, would you have said that this looks very oversold back there? Would you have said it's very oversold there too? I mean, I would still say yes, it's very oversold, but it keeps getting more oversold. And that is the thing that I would say you need to be careful about, that while it looks wildly oversold, and yes, while the Moxie indicator is above zero, these are just indicators. You have to actually have these things trigger and work, and you actually have to have money come in and people want to buy these things. Now, sure, maybe there's a pop or something like this, but man, look at that. There was a pop too, and there was a pop, and there was a pop, but they all got sold into. So I'm really probably not very interested in trying to look at something like this or trade it, because it's just, you're waiting for a turn, which may or may not come, and if you do get a pop, it's still not in an uptrend. It has to still turn all these moving averages. So I think you're playing a very difficult game by going after something like this, and I think that there are better things to put your time and attention to. So yeah, I would just not be interested in this. And I know with the meme stocks and all that kind of stuff that there have been some crazy moves back here. Like, I get it. I see these things, and it was fun for a while. And there are some setups. You can at least see right there that this move started when price got over an uptrending hourly 50. It at least had the moving averages in the correct direction. Compare that to right now, and you got nothing. And also, who knows if it's going to really go wild again like that. If you're going to play this, then you better be tuned into the Wall Street bets and all that, and join them. See if they're going to be helping out with that. Yeah, so Anders, so I know John is thinking rally in December. I've heard some of that too. I know I don't hate the idea either. Look, we had a little bit of a rally into Thanksgiving. We could be doing that too. We could talk about a Santa Claus rally, all that kind of stuff. That is definitely possible. But if I were to stick to my guns, I need to see a little bit more. Now, where I could be wrong is if price decides to hold the daily 21 from here and just kind of keep melting its way up, okay? That is possible. I think it's unlikely. What I'd really prefer to see, if we're going to see a rally into December, is I'd love to see just some sort of dip, and then maybe we can do this. It would at least help refresh things. And part of the reason I'm saying that is because if we do look at the Dow, and Jay, this comes back to you talking about how a lot of stocks are extended and where's the retracement, is I'm seeing something like this where the Dow is way up here. Like, the Dow has not touched the daily 21 since this move began. And so I'm at least looking for some consolidation, a pullback to the 21, like something to kind of just refresh this. I just don't see that there can be a whole lot new buying coming in right here because everything is kind of topped out. So any kind of new buying is going to be, I think, problematic and prone to failure just because everyone's kind of blown their load on the long side in through here. And it's just not a great place to get long. This kind of also reminds me, if you want to see an example of kind of a refresh that I'm looking at. Let me come over to here. Look at XLE. XLE is doing the couple of things that I'd be wanting to see from, say, even the Dow if we're going to go higher. Like Anders, so if we're going to go higher, what I want to see is, you see how the XLE has pulled back to the 21 and even below the 21? And what is it doing? It's basically flagging into the hourly 200. So this is the kind of consolidation, flagging, regrouping, building of a base that I'd want to see if the market's going to go higher. And I'm cool with that. Basically, what I'm looking for is I want to see a move like this. I want to see a fairly nice dip like that. That would help refresh. That would help kind of shake out some loose hands. That might get people a little bit excited on the short side, which, yes, we're there, but I'm only looking for a dip. And then if it gets bought back up, okay, then we can kind of start building a base and kind of refresh some stuff and buy us some time. Because remember, price can correct with time, not just movement. And time means sideways. So with XLE, I can't tell if price is going to, pull back to the daily 50, or if it's really just going to go sideways before the next move up, or if this is actually going to, if this thing is actually flagging to break down lower. Like, it's really hard to tell when things are just going sideways. So that's kind of where I'm at is, yeah, I just want to see a dip like this. You can see XLE did a dip to the hourly 200. And if you look at the Dow, now the Dow, I'm not saying that it's going to dip to the 200 right here. The 200 is probably going to be up closer to 330 or a little bit higher by the time this actually happens. But I am looking for kind of a dip, maybe to that trend line. And then we refresh, let it dip, clear out the trades, and then we kind of reassess and see what's happening after that. Jay, is the Moxie more effective with extended hours off, or can I also use the indicator with extended hours on? You can use it with extended hours on. You just have to kind of figure out how that works. What do you need to study? What does it look like? How do you apply the Moxie rules and lessons that I teach you to the after hours? Be my guest. Use it. It does work, and it can have benefits to you. It's just I never trade that way. I just don't do it. So I can't really speak to it. But yeah, I'm sure it does just fine. You just need to kind of look at things, study it, train your eyes, and then make trades off of it. Totally. So yeah, and then also, yeah, Anders. So that Dow DIA hourly sell is perfect. Yeah, exactly. Yeah. So Anders, that was the other thing. I was talking to the Moxie group over the last week, and I said, look, guys, the Moxie indicator keeps moving down and down and down. Oftentimes, the Moxie indicator does pretty well with timing. And I was saying, look, yes, we have a little bit of a drift up into Thanksgiving, but look at this. This is also why the Moxie indicator uses stair steps. If you'll notice, they did have about 3 days worth of green on the Moxie indicator, but was there any energy in it? And you can look, there was no energy in it. Those green lines were just flat. What you want to see if there's energy are big stair steps, either up or down. That means there's energy, there's momentum in that direction. So even though they were green, they were basically flat, no energy, and they were very close to zero, which means they're almost out of gas, they're on empty, and it's about to cross over negative and go negative. The other thing is, if you're trying to be bullish, how about the same thing just in reversed? Look how far back here price went down, but notice, yes, the Moxie indicator was red, but look how little red it was. Look how small those stair steps were. And the Moxie indicator was above zero. That's a trampoline move. So you had price below the 50, you had the Moxie indicator above zero, trampoline move. And for as much as price moved down, look how little the Moxie indicator stair stepped down. These are some of the visual cues that the Moxie indicator gives you, especially using these stair steps. They're very important. So you could see this as a bullish situation, and you could see this as a bearish situation, because look at how much price went up and look how little the Moxie indicator went up. Yeah, you call it the scoop. Yeah, I mean, that works. Call it the scoop, call it the trampoline move, like whatever works for you guys. I don't care if you rename anything. Whatever works best for you and your eyes, for sure. All right, then, so the other thing, keep in mind that, and I'll show you two things right here. Back here, when the Dow pulled back, and we called this was the FOMC, so we were totally on this one. And when, notice the Dow pulled back, the Dow didn't even touch its daily 21. So first I want you to know that, did not touch its daily 21. I'm going to compare it to the SPY. Then you see here, I'm still thinking price needs to go to the daily 21, probably a little below the daily 21. So if the Dow did that, what is the SPY likely to do? And Anders, this is to your point where you're trying to correlate this to the SPY. And if you look here, let me kind of open that up a little bit. This right here was that dip on the Dow. That was the FOMC. Where did the SPY go? The SPY went fairly significantly below its 21 EMA on the daily chart. The Dow didn't even get to its 21 EMA. So here we are where the SPY is basically at its 21 EMA. The Dow still needs to go down to its 21 EMA. So if this works, if the market does go down, dip, if the Dow goes to its 21 or just below, where do you think that the SPY is going to be? Probably somewhere here. I'm just guessing, but it's probably going to be what, 387. There's a bit of a gap here, so maybe it stays above that gap. Maybe it goes into that gap a little bit, you know, that kind of thing. And what would that also be on the hourly chart? It would be about the hourly 200. So, you know, we're going to have to see. We've got a few hours until Powell speaks. I think that would probably be the trigger. I can't say for sure, but it seems reasonable to think that if I'm right about this, that's where it's going to go. Yeah, topspin. Yep, exactly. Yes. You guys are funny. I love it. So let's see. Let's go this direction. Oops, what am I doing? Gosh, man, I tell you, for some reason my computer is being slow today when I'm trying to convert these things. Okay, that's better. What? Whew, okay, so let's see. SDOW. This is the leveraged ETF of the leveraged inverse ETF of the Dow. And what do we see here? I mean, if your eyes are more trained for the bullish side, then you flip these things upside down and you see what you can get. What do you have? Price moving down, Moxie indicator moving up. Now we have, look at this, we have price over the hourly 50. It could even be testing the hourly 50, which at least gives the ability for price to just have a quick move to the upside. And guys, if this is true, at least for the SDOW, mind you, SDOW, that we could be looking at a 50, 200, 50 maneuver, you know? So we're basically trying to play the first move. I know I talk about this all the time about first move, second move, and really the best move is the second move. But we can trade the first move as long as we understand we're doing that and we be quick about it. Because that's the whole thing about the first move, second move, is that there's almost always a pullback into the second move, which means that if you overstay your welcome on the first move, you eventually give it all back. But if we know that we're trading the first move, we can play that and you just get out right as the move happens or right as the move gets to where you want it to go. Yeah, FS, thanks. Bulls make money, bears make money, pigs get slaughtered. Thank you. That was the one. Sus, yes. There for the leveraged TLT, there is TMF. So that is leveraged on the upside. So Tango, Mike, Foxtrot. And then I had to do some research because I wanted to see if there was a leverage inverse ETF of the TLT, and there is. It's TMV. Tango, Mike, Victor. So yes, you can see I'm just kind of plotting a couple things and seeing if this is going to work. Again, just kind of looking for bounces or pullbacks, not a change of trend, just kind of looking for a little shift of a gear kind of situation. Rob, yes, the trading view, the Moxie for trading view comes exactly as you see it. So it covers all the time frames. It should be automatically loaded when you change time frames, and yeah, it should work just fine for you. We still need to work on scanners and stuff like that. You know, it depends on what the company can kind of come up with us as far as making all that stuff happen. So, all right, guys. So that's kind of what I'm looking at. Yeah, things are generally looking pretty weak. You know, the semis, look at this, just keep flagging sideways. You can see that we had a double top, negative divergence. Now we're going below zero. You know, we'll have to see how long the 21 EMA is support, but then other than that, I'm kind of looking for a dip. And we'll see where that dip goes. And again, there's hourly 200. Let's see if we can get price down to the hourly 200 very similarly to XLE. That's kind of what I'm looking for. Okay. Cool, guys. Thanks again, and we'll catch you next week.